Before I show you the 3 simple swing trading strategies that work, you must understand what is swing trading and how it works. So the whole concept of swing trading is that you want to capture one huge move, one big swing, and you also want to exit your trades before the market reverses and wipe out your profits. So here's an example of a swing trade. Let's say you see price at this support level, so you decided that you want to enter for a buy at this support level. Remember, as swing traders, our goal is to catch one big swing. So you catch this huge swing all the way up to at this resistance level, you close your trade, and that is one swing trade. Basically, you entered for a buy at the support level, and when price reaches like a level where there is sellers are going to be present, you exit out of that trade, so you capture this one swing move. So that's an example of a swing trade. Similarly, if you enter for a sell at this resistance, your take profit will be all the way down at this support level. So that is one swing trade. Now let's get on with the 3 swing trading strategies. So the first swing trading strategy is to catch the wave, right? So remember, our goal is to catch one move in the overall trending market. So the idea of this strategy is that you want to enter the trades after the retracement has ended, and you want to continue to trade with the trend. However, this does not work on all types of trend. You want to swing trade those trends that have like a deeper pullback or retracement, because there's more money towards the upside. So in this strategy, we'll be using the 50 moving average. As you can see, is this beautiful blue line right here. That is your 50 moving average, and we want to see price pulling back to this 50 moving average before we enter for the trade. So the first step is to identify a trend that respects the 50 moving average, and in this scenario we can see that price is in a downtrend because price is creating your lower highs and lower lows, lower highs and lower lows. So since price is in a downtrend, we should be looking to sell, but we do not want to sell like randomly at anywhere, right? You want to be like a sniper, just like I said in my previous video, be like a sniper and be precise on where you want to enter for the trade. So what you want to do is to wait for price to pull back to the moving average, then you can consider entering for the trade. And you can see in this scenario, let's say that price pull back all the way up to this moving average, and the moment when price pull back to the moving average, you do not want to enter for a sell yet. Let me repeat myself. You do not want to enter for a sell immediately when the price pull back to the moving average. What you want to do instead is that you want to wait for a bearish price rejection. You want to see signs that show you that price is rejecting the moving average and it's going to continue to head back down. Then that is when we can enter for a sell. So right here you can see that price has been pushing down, and then it starts to pull back up to this 50 moving average, and at this point of time we do not want to enter for a sell yet, because remember, we want to wait for some sort of confirmation. And right here price gave us a bearish price rejection at this level. It gave us a small little doji little looking thing, and then followed by a huge red candlestick that is just like rejecting the moving average. So yeah, you can enter for a sell position somewhere right around here when like this evening star candlestick pattern is formed. Place your stop loss above the swing high, which is right here. This is the most recent swing high, and you want to place it a few pips above it. And then I'll place my take profit at the most recent swing low, and you can see the most recent swing low is this level right here, because this was like the lowest point price went to before pulling back to this moving average. So that's where I'll place my take profit. And as you can see, this was like a very beautiful trade that played out like how we expected it to play out. The second swing trading strategy is fade the move. What's the meaning of fade? Fade means going against. So in this strategy, you'll be trading against the trend or against the momentum.
Oh, but you always tell us to trade with the trend.
Yes, I do. That is why this strategy is for those naughty little buggers who like to trade against the trend. So the first step is you want to identify like a strong momentum move towards the support level. You can see price has just been crashing back down, and at this area here is forming like a support level. So that's the first step, right? The second step is you want to look for a strong price rejection at this like key support level that we can see right here. And as you can see right here, at this point of time, price has literally broke past the support area that we have drawn somewhere right around here. You just like destroyed the support level and just broke past it. So at this point of time, you want to look for a strong price rejection as the candlestick form like a strong bullish close, right? Which is what happened right here. You can see price break through the support level, but remember, we are trading against the trend. So instead of like selling over here when price break through the support level, like all these retail traders, you should be looking to buy, right? You should be looking to buy. So at this point of time, I see that there's a very strong price rejection that is formed using this like big green candlestick, which tell us that, okay, you know what, price is not breaking past this support level and it's gonna reverse and hit back up. So I'll buy on the next candle being formed, which is like these candles right here, and therefore I'll buy here and then place my stop loss below the support area that we have just drawn right here, below the support area, just a few pips below like this support level, or you can even place it below the candlestick low, right? So this is the candlestick and this is the low, and you can place a few pips below it, this. So I'll place my take profit at the next swing high, right? Where's the next swing high? I mean, or rather, where's the last swing high before price drop all the way down here? This is the last swing high somewhere right around here. So that is where I'll place my take profit. And as you can see, this trade just played out like how we expected it to be once again. So the third swing trading strategy is called stuck in a box. Let me repeat myself, stuck in a box. Not, are you stuck in a washing machine, steps this? No, it's stuck in a box. So this is a swing trading strategy in a consolidation market where price is just going sideways. Like the market is in like a consolidation and is literally stuck between like the support and the resistance, just like a box. So the first step is you want to identify a ranging market. You want to find a market where price is just like going sideways and not going anywhere, just consolidating, which we have identified right here. So the next step is that you want to wait for the price to break below the support. So this is your support area and you want to wait for price to break below it, right? So which is what happened in this case. And if you recall, this is kind of like similar to the second strategy that I just showed you, right? So after price break through this support level, you want to wait for a strong price rejection that show you that price is not breaking past this support level, which is what price gave us right here, right? It gave us this huge green candlestick right here that tells us that there's a lot of buyers entering for a buy at this support area right here. So if there's a very strong price rejection like this, then what you want to do is that you want to enter for a buy position on the next candlestick open right here. Place my stop loss below the candlestick low like this, and then place my take profit at the resistance area right here, or you can even take profit before the resistance. Now you might be wondering, why should you take profits before resistance? Because remember, as a swing trader, you are only looking for one move in the market. So you want to exit your trades before the selling pressure starts to kick in at like this resistance level right here. Similarly, if you want to trade resistance, you want to wait for price to break through the resistance and show you some sort of signs that it's going to reverse and head back down, and then that is when you can enter for the trade, which is what happened right here. Price got pumped all the way up here and breaking the resistance area that we have drawn, and then it gave us one doji and another long wick candle, and then followed by a huge red candlestick right here, which signals to us that price is not breaking past this resistance area. You can short it down right here, enter for a sell position right here, place your stop loss above this candlestick high or above this resistance, take profit at the support level, because remember, at this support level there's going to be buyers trying to like pushing the price up, right? So that is where we'll place our take profit. As simple as that, guys. So I've done like a detailed guide on how you can trade each one of these trading strategies, where you can find on my YouTube channel. Check out this video next to find out more about the stuck in the box strategy. Check out this video right here and smash the like button if you have enjoyed this video, and click on that subscribe button, and welcome to the tribe. And remember, you're just one trade away. Mwah.